Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 6 o'clock in New York. It is Wednesday, 6th day of November, 2019, and this is the daily report for gold and silver. What a difference a day makes. After yesterday's sharp and I believe exaggerated sell-off, we have had a partial recovery today with gold gaining back about 1/3 of yesterday's decline. We did send out a trade alert suggesting that traders who had the available capital do what's called a dollar cost average and add a position to the long December gold. We will talk about that in detail, where our stop is, and our upside objectives, all on today's report. But first, let's take a look at the important price changes. As I said, we did have a partial recovery. $14.92 up $8.30. That is the current bid price on December futures in gold, up almost 0.6%. There is some key areas in terms of technical levels. We'll really hone in on that when we look at our charts. But let's look at silver. Silver gained about 0.3%, still below $18 at $17.61.5. And what is interesting is all of that was in light of a dollar, which for a change was fractionally moved, but I'm going to put this in the unchanged column. We can certainly see when we look at this chart here, 97.76.7, that is definitely a support or resistance area, and currently it is acting as resistance. Other things that had very little change or no change: Dow Jones Industrial Average closing unchanged. When we look at the S&P, up fractionally, and the NASDAQ Composite was really the only thing that traded in any way lower, losing about 0.3%. Let's take a look at our charts. We are looking at a daily chart, of course, of December gold, and there's a couple of things on a technical basis that are really important to kind of point out. And most importantly, when we look at what occurred yesterday with that major drop, first of all, I think it was overly exaggerated, but it did break through the 50-day moving average. That is, to me, fairly important. But the reason I said that I don't believe any major chart damage was formed was, one, we are still well above the 100-day moving average, so we are still in a bullish trend. And most importantly, when we look at what I'm looking at as a major technical support level, and that's this dashed line here, let me go ahead and kind of highlight it. What we can see is as follows. When we look at price over time, what we see is that during the month of October, we did get a series of lows that came in, but it seemed as though this was the area that they fell at. We had one day here, which is right at the beginning of October. So the last time we actually broke below that price point was at the end of September. Since that point, this level has been absolutely eloquent in terms of defining support. So when we saw the market come down, and as I said, I believe it was exaggerated, one, and two, when we saw that it landed right at, and that's the low one I'm talking about, landed right at these lows here, which is approximately 1480, closed a little bit above, it then opened higher today than the close of yesterday, as well as closing higher than it opened today, a gain of about $8.50. And that is my rationale for suggesting that we add to our position or dollar cost average, because my sense is that this is a level that should hold. I would be concerned if we had a hard break through the 100-day moving average. But all things being equal, as long as we hold above this line, we should see at some point a push back to the upside. That being said, we had one position that was sitting at 1514. And today we followed that with another trade alert. I've actually put that up on the screen. This is what you received in the email. Of course, the SMS text message was shorter, but in essence, what we suggested is that you dollar cost average, which means you had one position at 1514. We added another position today at 1492.90. When we add them together and then divide by 2, we get an average price of $1,503.45. You've got double the positions, yes, but now you have effectively cost average, because it was my belief that we had an exaggerated move in the market and we could do one of two things. We could let the market be behind us, or we could use it to our advantage. And in this case, I thought that was the best possible of moves. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.